Are you new to trading and feeling like no matter what you do, the market is always one step ahead of you? You're not alone. Every beginner trader at some point falls into common traps that can cost them not just money, but confidence. Today, we're going to break down the top 5 mistakes that beginner traders make so you can avoid them and start your trading journey on the right foot. The first mistake might surprise you because it's not just about strategy, it's about mindset. Many beginners enter trading thinking it's a shortcut to fast money. They imagine making hundreds or even thousands of dollars in a single trade without fully understanding the risk or the market mechanics. This mindset leads to impulsive decisions, chasing losses, and overtrading, which is one of the quickest ways to deplete your account. The reality is that successful trading is about consistency, patience, and discipline. It's about having a plan and sticking to it, rather than letting emotions dictate your every move. Understanding that trading is a marathon, not a sprint, sets the foundation for avoiding many pitfalls later. The next mistake is closely related: lack of a trading plan. Beginners often jump into charts and start buying or selling based on random tips, social media posts, or gut feelings, without a clearly defined plan that includes entry and exit points, risk management, and position sizing. Even the most promising trade can turn into a disaster. A trading plan acts like a roadmap. It gives you structure, reduces emotional decisions, and allows you to evaluate your performance objectively. Without it, every win feels lucky and every loss feels catastrophic, creating a roller coaster of emotions that most traders can't handle in the long term. The third mistake that beginner traders often make is ignoring risk management. This is a silent killer, because even if your strategy is technically perfect, one bad trade can wipe out weeks or months of progress. Many beginners focus solely on potential profits and overlook how much they could lose on a single trade. They might risk 10% or even 20% of their account on one position, thinking that a big win will solve everything. The truth is, losing trades are inevitable in trading. It's not a matter of if, but when. That's why proper risk management is essential. A simple rule like never risking more than 1 to 2% of your account on a single trade can protect you from catastrophic losses and help you stay in the game long enough to actually learn and grow. Along with risk management, beginners often neglect stop losses or move them unpredictably based on emotion. A stop loss isn't a restriction, it's a shield. It's what keeps you from turning a small loss into a devastating one. Learning to respect your stop loss and setting it correctly according to market volatility is one of the fastest ways to level up as a trader. This ties directly into the fourth mistake: overtrading and revenge trading. After a loss, beginners feel the urge to immediately recover, often entering trades without proper analysis just to make back what they lost. This emotional trading is like pouring fuel on a fire. It rarely ends well. The key is discipline. Take a step back, analyze why the loss happened, and only trade when your plan and analysis signal an opportunity, not when your emotions demand it. Emotional control separates the casual, inconsistent traders from the ones who consistently grow their accounts over time. The fifth and final mistake that beginner traders often make is failing to educate themselves and relying too much on others' opinions. In the age of social media, it's easy to get caught up in the hype, following influencers, joining trading groups, or copying someone else's trades without truly understanding the reasoning behind them. While learning from experienced traders can be helpful, blindly copying their actions is a recipe for disaster. Every trader has a different risk tolerance, strategy, and mindset, and what works for one person might lead to losses for another. Beginners also often skip the most crucial part of trading: continuous learning and reflection. Trading isn't a one-time skill. It evolves constantly, and markets change. Keeping a trading journal, analyzing your wins and losses, studying patterns, and learning from mistakes are what build long-term success. Education doesn't stop at reading charts. It includes understanding psychology, risk management, market behavior, and even global news that can affect trades. Traders who fail to invest time in learning end up repeating the same mistakes, chasing quick fixes, and ultimately burning out. Now that we've covered the 5 biggest mistakes: chasing quick profits, trading without a plan, ignoring risk management, overtrading out of emotion, and failing to educate yourself, let's talk about how to actually avoid them and build a strong foundation for trading success. First, focus on developing a disciplined mindset. Treat trading like a business, not a gamble. This means setting realistic expectations and understanding that losses are part of the process. Every experienced trader has lost money at some point, but what sets sets them apart is how they manage those losses and learn from them. Next, create a well-structured trading plan that clearly defines your strategy, entry and exit points, stop losses, and position sizes. Stick to your plan even when the market gets volatile, because consistency beats impulse decisions every single time. Alongside that, prioritize risk management. Protecting your capital should be your #1 rule. Decide before every trade how much you're willing to risk, and never let emotions push you to exceed that limit. This simple discipline prevents small mistakes from turning into account-destroying losses. Finally, commit to continuous learning and reflection. Keep a trading journal where you record why you entered a trade, what your expectations were, and the outcome. Analyze both your successes and failures to spot patterns in your behavior, and never stop educating yourself about strategies, market conditions, and trading psychology. By addressing these mistakes head-on and actively implementing solutions, beginner traders can avoid the most common pitfalls and dramatically improve their chances of long-term success in the market. To wrap it all up, remember that trading is a journey, not a sprint. Avoiding these common beginner mistakes isn't about luck. It's about discipline, patience, and continuous improvement. Always start with a clear plan, respect your risk limits, control your emotions, and never stop learning. Think of trading like building a house. The foundation is your mindset and education. Your risk management is the walls that protect you, and your consistent plan is the roof that holds everything together. Beginners who ignore these elements often burn out quickly, chasing quick wins or copying others blindly. But those who embrace discipline, reflect on every trade, and steadily refine their strategy will find themselves not only avoiding losses, but consistently growing their accounts over time. The key takeaway is simple. Trade smart, not impulsively. Protect your capital first, and treat every mistake as a lesson, not a failure. By internalizing these principles, you're setting yourself up for real, sustainable success in the market, and that's what separates hobbyists from professional traders. Remember, the goal isn't to make money fast. It's to become a skilled, confident, and resilient trader who can navigate any market with strategy and calm. Before we end, let's leave you with a final mindset shift that can change the way you approach trading forever. Many beginners think that success in trading is all about finding the perfect strategy or the next hot stock. The truth is, success comes from mastering yourself, not the market. Your emotions, discipline, and ability to stick to your plan will determine your results far more than any indicator or tip ever could. Start small, focus on learning, and accept that losses are part of the process. They're lessons in disguise. Celebrate your progress, no matter how small, and don't compare yourself to others, because every trader's journey is unique. Finally, make a commitment today. Track every trade, analyze your mistakes, and improve a little each day. Trading isn't about hitting home runs on every trade. It's about building a consistent, repeatable process that grows over time. Remember, the markets will always be there tomorrow, but the skills, habits, and mindset you build now will set the foundation for your long-term success. Take control of your journey, trade with intention, and let patience, discipline, and education be your greatest allies.